Okay, today we're going to talk about how to owner finance a house in Texas. So have your pen and paper ready. This is where I'm from, and I know exactly how to do it. My name is Mitch Stephen, and I've purchased a house about every 4 to 5 days in or about my hometown of San Antonio, Texas for over 2.5 decades. So I think it's fair to say I've done my fair share of owner financing in my state of Texas. So listen up, and I'm going to show you exactly my best practices and see if they make sense to you. A lot of people ask me all the time, what do your acquisition docs look like? Why do you use an LLC? Do you use a wraparound mortgage? Some people are asking me, what is a wraparound mortgage? Do you always use a mortgage and a deed of trust? And why do you use a land trust, Mitch? We're going to address all those questions coming up right now. And for those of y'all that stay with me to the end, I'm going to give you a little gift I'm sure you're going to appreciate. I always acquire properties by using a land trust, and my LLC is the beneficiary of the land trust. I don't do this for liability reasons because those went away a long time ago. I really do it for a little more anonymity, ease of transfer, and number one reason why, estate planning. That's the biggest reason to use a land trust. It's important to use your LLC as a beneficiary or your C Corp or whatever entity as the beneficiary instead of your own personal name. Most people are very aware that they want their properties owned in some kind of business entity so they're not personally liable. But where they make the big mistake is when they pay cash for something. When they pay cash for something, they just have this paid off property sitting around in their name. What should really happen when you pay cash for a property is you should loan the cash to your business entity or your LLC. And there should be formal documents between you and that LLC. And then you should file a lien at the courthouse so this house is no longer just sitting around free and clear like a big bullseye target for some attorney to come after you about. You want to put a lien on the property, and so the property is encumbered and you're less likely to become a target. Never have a house free and clear. There should always be a debt owed to somebody, somewhere, somehow, some lien on your property. Again, I don't believe in having properties listed as free and clear. There's always some kind of debt filed down at the courthouse. And people are always asking me, should I use a corporation, an LLC? What do you use, Mitch? I use an LLC, a limited liability corporation. It's the best for real estate, especially if you're going in and out all the time. The problem with C Corps is double taxation, among other things. But here's the bottom line. You can pick a C Corp or an LLC or whatever it is you want to use. Learn the rules of that game and win. It doesn't matter which one you pick if you win. Okay, so I prefer LLCs, but I have my own reasons. Talk with your attorney, your legal professional, and decide for yourself. But be careful if they tell you to flip real estate in corporations. I think that's a mistake. However, as I've stated before, I'm not a licensed attorney. I'm not a licensed financial advisor. And that's why I'm telling you to seek counsel from your attorneys and your professionals. There's also a relatively new entity coming down the pipeline. It's called the Series LLC. I really like Series LLCs, but they're a little more complicated than you might think. Used to be if we wanted to open up an LLC for this batch of properties, we went down and we filed the name, we paid the $600, $800, $1,000 fee, whatever it was. And then if we had another batch of properties that we wanted to put them in a separate LLC, we had to go file for another one, pick another name, pay another $600, $800, $1,000, whatever to the attorneys, and so on and so forth. So you had to pay over here, then you opened up another one you had to pay, you opened up another one you had to pay, you opened up another one you had to pay. The advantage of a Series LLC is you can pay for one Series LLC, and then you can open up Series 1, and then when you want to open a new company, you just open up a new name Series 2, a new name Series 3, a new name Series 4. Here's the problem though. There's no firewall between these series unless they have their own individual EIN number, their own individual tax number, and their own individual bank account and checkbook. The problem with these real easy to do LLCs in the series after another series after another series is there's really no firewall between any of them unless each one of them have their own EIN number or tax number and their own bank account and accounting. Now the accounting's easy enough. You have the different series, and in the memos you put, this check is under Series 2, the so-and-so LLC, and you can track the accounting simple enough. But the most important thing to take away from this conversation is, in order for these series to stand on their own and separate from each other, they have to have their own EIN number or tax number and their own bank account and their own accounting. Before I go a little further, please click the like button and share this with your friends that are involved in real estate if you think it might be of interest to them. We're going to be talking about mortgage and deed of trust and land trust a little bit more. So in Texas, I use a mortgage and deed of trust because the foreclosure process is really fast. And by the way, if you're in Georgia, I got good news for you. Georgia and Texas have copied each other. Now, if you're from Georgia, you'll be saying that the Texans copied you. But if you're from Texas, we'll be saying that the Georgians copied us. But either way, the foreclosure process is the same, and it's very quick. Really, technically, if you're just in line and the stars and the moon all line up together right, you can foreclose in about 45 days, give or take a few days. But that's not usually how it works. It usually takes about 90 to 120 days, and that's if your occupant doesn't lawyer up and file bankruptcy. So I've had that happen to me a few times. It's just the cost of doing business. Most of the time, I have people in and out in a reasonably decent period of time. Again, I'm in the state of Texas, and if you're in Georgia, I have good news for you. The foreclosure laws in Georgia are the same as Texas, so I know a little bit about those two foreclosure processes. That takes about 90 to 120 days. Although, if the stars and the moon lined up exactly right, you could foreclose in as little as 45 days, give or take a day or two, but that's not usually how it works. Now, of course, no matter who you are or what state you're in, Texas or Georgia, your adversary could choose to file for bankruptcy, and that could take an extended period of time. And it's happened to all of us at some point in our careers if we've hung around long enough. But it's not that often. We are not in states that are that litigious. And it's just the cost of doing business. I do a lot of transactions. If every now and then I have to deal with a bankruptcy, then so be it. It's still a great living, and I wouldn't change over that little bitty hiccup. I also want to go a little further into why I use a land trust. And that would be to say that I don't go to a closing hardly at all. As a matter of fact, I don't think I've been to a closing in the last 15 years. If I did go to a closing, it was just because I wanted to visit someone that was on the other side of the table or talk to my closing agent because they've been doing us a great job. But I use land trusts so that my trustee can close transactions for me. At 100 acquisitions per year and 100 sales per year, that's 200 transactions that I don't have to go to because I have trustees that go and perform these closings for me. And that's one of the main reasons I use land trusts. Another question I get regularly is when I have a new person that's really never been in the business before. They're fixing to do their first house, or they're thinking they want to do 1 or 2, 3 houses, but they haven't done anything yet. They say, well, do I need to set up an entity like an LLC or a corporation before I do even my first house? And to that, I will say this, and it's my personal opinion. Don't worry about setting up an LLC or a corporation in your first couple of houses. Don't go through the expense or the anxiety or the drag of having to wait for that until you can do a deal. When you're first starting out, just do a couple of deals. Let's see if this business is for you. You don't have to spend a lot of time setting up. If it's for you, we can go back, we'll make up the LLCs, we'll move the properties into the LLCs, but don't have to worry about it up front. Just do some deals first. Now, I will make a caveat on this. If you have a very high net worth, then maybe you'll want to slow down and start with a corporation or an LLC up front. But if you don't have much of a net worth, just go out and do a couple of deals and prove that this business is for you. Last but not least, sometimes we're tempted to use old LLCs or old corporations that have been laying around that we haven't closed yet instead of going through the expense to create a new one. Here's the problem. If you continue on with an old LLC or an old corporation, that corporation or LLC still might be liable for all the things it's done in the past. Maybe it's better just to close those once and for all and start over with the fresh entity that has no history and no past and no liabilities that could be carried forward. And now it's time to get to that free gift I promised you earlier in the episode. If you'd like to get the first 100 pages of my book, My Life in 1,000 Houses, Failing Forward to Financial Freedom, just click on the link below. What's cool about this is it's immediate. Just click on the link below, give them your information, and you will have the download within seconds. Thank you for joining us.